We are reforming the market.
Yeah.
Our strategy is working. We are seeing huge opportunities in the horizon.
Excellent.
This is the time to come to our market. The government should be borrowing at affordable terms.
Absolutely.
People who take higher risk, should get a higher yield. We cannot grow this economy if we don't have deep capital markets. Private sector is truly best place to run businesses.
Yeah.
Of course, with support from government from a policy and regulation perspective.
Hi and welcome to the Trading Bell. It's still half-year conversations and the NSE as well has done its thing. And we're here seated with Frank Mwiti, the CEO of the exchange. It's been 1 year, 4 months or so, 3 months, 4 months there. And we promised him and we told him we'll put him to task. And this is it now. After 1 year, nobody is forgiven, right? But Frank, welcome to the show.
Thank you, Maina. Thank you for having me.
When I was choosing my tie, I tried to get something with some green on it.
Yes. For NSE.
Yeah. No, I just wanted to ask you to make a guess why I had to choose a green.
Oh, the markets are up. It's because the markets are up. Well, you will have to have a green tie for a very long time. As long as I'm here, then you will not wear any other color.
That's a good one. Always glad to see you. And,
Same here.
There's a lot of good vibe going out there. And I just wanted you to just paint a picture. Even when I looked at your half-year results, remarkable performance over the last 2 years as well. Could you walk us through the drivers behind this and what you feel about it?
Yeah, thank you. First, you're right. I think the year is off to a fantastic start.
Yeah.
On the back of very good performance last year in 2024. There are different factors driving the current good performance.
Yes.
Part of it, of course, is the macroeconomic environment.
Okay.
We've seen the economy pointing in the right direction. Inflation is stable.
Yeah.
The Kenyan shilling is stable. Our foreign exchange reserves are up.
Yeah.
So based on that, those policy environments, it's created a conducive environment for investments.
Yeah.
As a result, the entities that are listed on the NSE, which represent, the essence of the Kenyan economy, if not East African, have also done well. The majority of our listed companies have announced very good results.
Absolutely.
And similarly, we've seen the reforms and the strategic initiatives that we started last year now starting to take root. So both the policy environment as well as the reforms we've done at NSE and the strategic push we're having to bring more visibility to our market, to make it easier for people to trade in our market, has resulted in really good results for NSE itself, which, as you know, is also a listed company on our own exchange.
We should talk about its share price as well. I noticed some good numbers
Absolutely. Yeah. And maybe to finish off that point, the upswing in the market, as you know, started last year. So really, this is an acceleration of that momentum. And we can talk in a bit more detail how we intend to sustain that momentum.
Which is actually my next question. Whether this market upsurge, how do you plan? Is it going to continue and how do you plan to sustain it? Do you have some quick thoughts towards that?
Let's start by saying that we are 7 months into or 8 months into implementing our new strategy for 2025-2029. So by extension, the idea is to implement our strategy because it's working. Keep implementing it and implement it with a lot of focus. And that is really part of what will sustain the momentum. And number two, of course, is we're working very closely with the policymakers on the government side as well as regulators to see what other reforms and initiatives we need to do to enable the market to grow as it is growing, or even to grow faster. To get back to the high levels it was in the early 2000s, but also to surpass that. Because if anything, this market should be one of the biggest. It's already one of the biggest in Africa. But if you consider that the NSE represents companies, or rather companies listed on the NSE, are doing business across East Africa, not just Kenya. And East Africa is one of the fastest growing regions in the world. You should expect that the main exchange in the region should follow that trajectory. So yes, we are 8 months into implementing our strategy. The metrics that we are tracking for that new strategy, for example, bringing in more listings, diversifying from over-reliance on trading, bringing more products. That journey has just started.
Excellent.
So yes, the momentum will continue. And more importantly also, of course, we want to have more investors in our market.
Oh, okay. That's good. Let's talk about, first of all, a bit of the numbers. First of all, I think you have highlighted about the strong financial performance and all that. And I noticed your half-year results, 177% up.
Yeah.
I think it was about 151.6 million and all that. And I wanted to ask you, because this is now purely under your purview.
Yes.
As I say again, we cannot now say you're a member now.
Yes.
What are the key operational structural changes maybe that you have done that have drove to this sharp turnaround? Because this is not just a small one. This is a big one in itself.
You're right. This year, our total income is up 119%.
Oh, okay.
Compared to same period last year. You will recall our results for the whole of 2024 were also very good. I mean, our profit was up 550%. Okay.
Impressive.
So what have we done to get to that level? I should also mention our profit for half year is also up 177%.
Absolutely.
From 54 million to 151 million. So we are tracking a number that will in all likelihood be the biggest profit in NSE's history.
Wow.
Okay, so we are back. I think that's the point. What have we done? Well, the first thing we did last year when I joined is to focus on managing our costs down.
Okay.
Our cost to income ratios were not impressive. Last year we moved it down to 79%.
Okay.
This half year we've brought it down to 61%. In our new strategy, our target is 40%.
Wow.
Cost to income ratio.
Okay.
Which would
Good
compare
traction.
exactly, and it should remember we are in the financial services sector. So we really, our comparative should be the cost to income ratios of entities operating or companies operating in the financial services space. So to aim for 40% is the right thing to do. Number two is improving market access. You will recall about 3 or 4 weeks ago, we enabled, we changed our rules to enable investors to buy a single share from the existing rules where you had to buy a minimum of 100 shares of any given counter.
Now you can buy one.
Now you can buy one.
Wow.
And with CMA's approval, the push is now to also have fractions. You can buy a fraction of a share.
Wow.
What that does, Maina, is it means that the market is truly inclusive. Whether you have 1 shilling or you have 1 billion,
you can get it.
You can come into our market.
Wow.
Okay. And we are seeing already that bringing change to our market. The other thing is listings, bringing new listings to the market. For example, in our strategy, we have committed to bringing 40 new company listings by 2029. Okay, so we've already listed SKL this year. So we are 1 down, 39 to go. Okay, we also have commitments to list 50 new structured products. We listed Talanta, asset-backed security, 44 billion earlier this year, where the president was here. We've also listed the Citrix ETF.
Absolutely.
So
I was present. I
two
saw
down, 48
to go.
Correct. And then the last thing is we're also looking to upgrade our infrastructure, market infrastructure. So our trading systems, to enable, first of all, to modernize our infrastructure, make it, world class, and at the same time enable more players in the capital market ecosystem to interface with our trading systems. Beyond that, of course, we're also making sure that we earlier this year I reorganized our team to make sure the right people are in the right positions, and also reorganized our go-to-market approach, so that we are able to go to market from a business development perspective in a strategic way. Again, that has started bearing fruits.
Excellent.
And we've gotten also a lot of support from our primary regulator, the Capital Markets Authority, and we are coordinating also very closely with the other regulator, central bank, given our bonds side of the business, and working also closely with CDSE.
Absolutely.
And of course the investment banks and stockbrokers and fund managers and custodians. All that is bearing fruit. We are not where we are by accident. I think that's the thing. Of course, for our equities market, it is also benefited from the drop in yields on the government paper. That has meant that investors, both retail and institutional, have started reallocating their portfolios from bonds to equities. And then lastly, we've also seen increase in net foreign inflows. So telling you essentially the visibility we've brought to our market is enabling more foreign investors to trade our market. And so the profitability, the increase in profitability of NSE, and the increase in market indices, which are all up. The NSE share index is up more than 40. I think it's 44% year to date. Added close to 900 billion to investor wealth. All those things are part and parcel of how come the market is where it is, and why you're wearing the green tie that you're wearing, and that you will continue to wear for a long time, as long as I'm here.
I love this. And I love the optimism, especially for shareholders, definitely there. I mean, speaking about the share as well, because I also looked at your share price as well, I mean, which has seen some significant rise. You could touch on that, but also the bonds market as well. I've noticed we're about to break history. We have already crossed the 1 trillion mark for the first time. What's driving all this? Maybe you could touch on the share and the bonds turnover as well.
So yes, the NSE share price, as the listeners probably know, that the NSE is a listed company. We are listed on our own exchange since 2014. So we are accountable to shareholders, just like any other listed company. And our shareholders are spread out between retail investors, both local and domestic, local and foreign, as well as institutional and non-institutional, as well as government. And government of Kenya owns 3.36% of the NSE. Our share price has done very well.
Over 50%,
right? Over 50% up. It's been actually one of the best performing shares on our market. So from one time I sit on this table, then I cross on the other table, and I tell myself that, so our shareholders, they are happy. We had our annual general meeting the other day, and we got very good feedback from shareholders. Of course, my intention, Maina, is for that share price to go higher than that. More than that, for sure. Because with all the strategic changes we are making, there's every reason to say that we are really capturing value for shareholders. And therefore, that share price should be reflective of that. But on the same thing about share prices, I should also mention that almost every single share on our listed entity has improved.
Absolutely, the counters.
So both the high value share prices, shares, as well as some of the, shall we call them, penny stocks. They have all improved. Hence the reason I'm saying the NSE all share index, which is a reflection of everyone who's listed, is up 44% year to date.
Impressive.
In the past, there has been feedback given to us that our market is not efficient because the share prices are not reflective of the real value, of intrinsic value of our listed companies. There's some truth to that. Part of it is, I think in the past, not a lot of attention has been paid to providing clarifications and engaging with investors on various listed companies, so that shareholders are able to really understand the entities that they are investing in.
Absolutely.
You will have seen, for example, last year we pushed for listed companies to mandatorily provide corporate action, calendar of their corporate actions, proper investor briefings, filing their accounts, among other things, and also to drive better investor relations. So those things have continued to support some of the improvements that we are seeing in share prices. On the board side, beginning last year, you will have seen that the government of Kenya, through National Treasury and Central Bank, have been pushing to bring down the yield on treasury bonds and treasury bills, with the intention of having both of them in single digits.
Yeah, that's true. Yeah.
As opposed to the very, very...
There was a time where people were running there.
Absolutely, And in truth be told, the government cannot possibly survive on...
Sustain all that.
It can't sustain on that high popping, on those high popping rates. The policies that National Treasury and CBK have been doing to do that, in my view, I think, first of all, it's clear that they are absolutely firm on the intention to bring these rates to single digits. Those discerning investors who realize that the yield is better in equities, because those numbers, what they were getting last year and the year before on treasuries is definitely coming down, are doing great thing, which is relocate while you can to equities. Because even that has also affected things like money market funds who invest, for example, in treasury bills and other liquid instruments. Their yields have also had to come down. I actually believe that's the right thing. Honestly, remember, if our government is borrowing at high popping rates, you and I, one way or another, will have to, one way or another,
all that.
Taxpayers. It's taxpayers. So it is actually not in the interest of many Kenyans. The government should be borrowing at affordable terms.
Absolutely.
Truly risk-free rates. Because at the end of the day, it's taxpayers that are actually managing that. So I think it's the right policy for sure. On number two, people who take higher risk should get a higher yield. When you invest in a company, you're taking more risk than packing your money with treasury bonds. So your reward should, of course, be higher, which is what our market, so it's telling you the market is working right.
The way it's supposed to work.
It's the way it's supposed to do. Number three, we cannot grow this economy if we don't have deep capital markets. It's literally impossible for the private sector to grow in the absence of quality local capital. So NSE, we are very, very sensitive to the role that NSE plays in this economy, mobilizing capital for both private sector and public sector. And we want to reassure the people out there, including your listeners, that we take our role very seriously. A successful NSE is a successful Kenya.
Yeah.
We are a barometer of what is happening in our economy.
Absolutely.
Actually, I would almost say in East Africa, given the footprint our listed companies have across the region.
You're right.
And we've seen a lot of support from the government to make sure that happens. But the point I was making is that the drop in yields in bonds has benefited equities. And I think that will continue to be the case going forward.
And it's good on the overall.
It is the right thing, actually.
Okay. I can't miss out to ask you about your ambitious big goal of the retail investors. 9 million.
Yes.
You know, last time we talked about 9 million, and we said that we should always ask you that question.
Yes.
You mentioned a little bit on leveraging technology. You also talked about your route to market to where they are. How is it going so far?
Yes.
Yeah.
So you're right. We have a big ambition to have 9 million active retail investors.
I like the word active.
Yes, active.
Yes.
And retail for us is both local and diaspora.
Yeah.
There are three things that at least we've done in the preceding months.
Yeah.
Number one is what I mentioned about making the market more accessible. For example, being able to buy one share.
Yeah.
Number two is bringing products like we've done, like the ETF, because that makes it easier for retail investors to access our market and really trade the market easily. Now, the other initiatives we've been doing is, number one, we are working closely with the CDSE and the UFA, the Unclaimed Financial Assets Authority, to come up with to roll out a program to activate dormant accounts, because we have about 2 million dormant accounts.
That's a lot
in our market. 99.9% of which are retail. Many of them came during the Safaricom IPO. So there's work to do to reactivate those, and that work has started. We are reaching out through SMS and other market alerts. The second thing we're doing is engaging with aggregators of retail demand. Primarily, these are SACCOs and chamas, because SACCOs, first of all, they are trusted, and I mean their members are retail, and some of them have hundreds of thousands of members. And so we've started engaging with them. And my colleague Jackson Kiminja is leading that initiative. In fact, earlier this week we had a meeting with the CS Oparanya, the minister for, call them cabinet secretary now, cabinet secretary for cooperatives and MSMEs, and to discuss how we enable SACCOs and cooperatives to access our market. The idea is to work with the ministry to really enable SACCOs and cooperatives to list on the NSE. And of course, for their members to also be able to access our market. And of course, also trade their shares, which is a big issue. So that initiative is also on the way. We've also rolled out several programs focused on financial literacy and investor education, so that retail investors understand our market, and then it's much easier for them to open accounts, trade, and go on.
And get in the market.
Yes, so that there are several initiatives we're doing around that. Of course, one of them, and I reached out to you, you recall, is we also want to engage with local media.
Absolutely.
Ideally, we want to be able to speak to the market through
vernacular,
regional radio stations, so that we can reach people through the channels that they prefer. Where actually I think the majority actually are. We also have rolled out a program targeting university students, so that they start. We have an application called NSE Soccer Play, which is a free application that gives you free virtual money for you to give you access to live data, live market data, so that you start understanding the market. You can invest the virtual money, and then once you're comfortable how to invest, how the market works, then you can transition to the real deal. The real deal, real money now, not virtual money. Among other initiatives. So that we are on our way to 9 million.
I like that.
What I would like to say is there are some forums I've been where I was told 9 million is not ambitious enough. What? Yes. So what I have said is, my friend, let me first let me get my 9. Look, Maina, if we have 9 million active retail investors, I mean, you would need a very big calculator here, because 9 million people investing, just say 10,000 shillings a month.
That's not good to the finger, man.
Yes, exactly.
With the bees and going.
Exactly.
Yes.
So the opportunity is massive. What we must do is, and this is what I encourage my team every day, execute the strategy ferociously with pure focus.
Excellent.
We have the right strategy. We just need to implement it. And we have started doing it.
I want to close the conversation, and I know it can never end, and we'll be talking more even on the subsequent days. But I would like you to close by touching on your, as you said again, quite bullish on the listings. You still got a 40-something to go. I love the fact that we have already started doing this. So there's a privatization agenda, the bigger picture. Last time we had mentioned something about it. I don't know what's going down there. And also your positioning globally. I mean, we have had very good things happening, including the 12 companies that were listed at MSI indices, also the Moody's ratings, all those kind of things. What are you seeing? Privatization and global positioning.
Okay. Let me start with privatization. First of all, I want to say that one needs support from government for privatizations to happen. Okay?
You're right.
Which we have. The president and this administration is very pro capital markets, hands down. The president has been here a number of times.
It's record time. I'm looking at the previous president.
Exactly. The conversations we've been having with various departments in government, including National Treasury, the likes of Ministry of Trade, etc. Very, very progressive discussions. The privatization that I think is in the cards has been seen in the media for a while now is the Kenya pipeline. In fact, I think last month I joined both the Capital Markets Authority and the National Treasury, led by the CS, to make a presentation to the National Assembly Parliament on the KPC, proposed KPC privatization. And the indications are that this would happen this year. But obviously it is subject to a process. And that process is primarily managed by National Treasury, of course, in this case, the Privatization Commission as well as CME and ourselves, and of course, Ministry of Energy, given KPC's home ministry. Interestingly, initial assessments show that KPC would be oversubscribed. Number one. Number two, in all likelihood, it will be absolutely bigger than Safaricom. So you can imagine how big an IPO that will be. We've already gotten a lot of reach outs from foreign investors looking to understand where we're in this process, because they want to allocate capital to invest in the KPC IPO. We should also mention that KPC is very profitable.
It is. It's been recorded in billions.
3 billion shillings in dividends to the government last year.
Wow.
But we think in private hands, it would be it can be optimized.
Yeah.
It will be optimized.
Absolutely.
Look at Safaricom. Safaricom was a government entity. Look where it is now. Kengen was a
government entity as well.
Look where it is now.
Yeah.
It's doing business in Ethiopia, Eritrea, Djibouti, DRC.
Yeah.
Kenya Power.
Same thing.
Same.
Yeah.
I can name quite a number. KCB was a government entity.
And now look
what it is in, I think, 8 countries or so.
Yeah.
So it tells you private sector is truly best place to run businesses.
Yeah.
Of course, with support from government from a policy and regulation perspective.
Yeah.
So the need for privatization should be rather obvious. Okay? It should be rather obvious.
Yeah.
In any event for KPC, the session of paper that was done by National Treasury to Cabinet shows that the government's intention is to retain 35% and float 65%, which means the government still has a stake.
It has a stake.
It has a stake.
Yeah.
Number 2, KPC, the intention, at least from the discussions we've been part of so far with government, is that privatization should also enable actually 3 things. 1, local investors, retail investors as well as to participate. Number 2, foreign investors, a lot of whom are just waiting.
Yes, ready to come.
And then number 3, other strategic partners. For example, Uganda potentially, because KPC is quite relevant to Uganda, given it transports energy to our neighbor there. So they do have an interest. And from some of the conversations I've been party to, there are considerations around how do we allocate or give an opportunity for our neighbors to also participate. If you recall, just to conclude the point on privatization, why this is the time to do it.
Yes.
But 1, government needs money. In fact, in the proposed budget, if I don't get this number wrong, I think it says the government will raise 146 billion from privatizations.
Wow.
For KPC, 100 down, 46 left to go. Okay. Now, so government needs money.
Yes.
Otherwise, we will end up either having to borrow or cutting down on development. Number 2, the timing is right because there's a lot of liquidity in the market. The other day, on one of the infrastructure bonds that
was oversubscribed.
Yeah. But I think close to 300 billion.
Yes.
That has to go somewhere.
The signal enough. Yes.
Number 3, it is KPC will do even better. And private, you can imagine improvements in corporate governance, improvement in innovation, improvement in public profile, ability to tap further funding for growth without pushing on the exchequer to foot the bill. So this is the right thing to do. Whichever way you look at it, this is the right thing to do.
And we have the blueprint of other companies that you've given.
Absolutely. So that's on privatizations. And of course, there are other entities that have been flagged for potential privatization. Privatizations, I think, will continue to be a key source of listings for our market. But I also want to remind the viewers that it's not just about privatizations. The NSE is supporting government to access capital to do things like infrastructure. For example, the Talanta asset-backed security that was issued 44 or so billion through the NSE. That goes to build the sports infrastructure without the government being asked to pay, or rather, without the government borrowing itself, because it's through securitization. If you look at the Sukuk that was done last year, again, that went to support public housing infrastructure for KDF. The government through the National Treasury has challenged capital markets and NSE in particular to be able to bring private solutions from the private sector that enable government to access local and global capital to finance the economic development. So privatization is not just democratizing access to ownership and things like this. It's contributing to the economic development of our country.
Absolutely.
Any, I think, right-thinking person would be saying, why are we not doing a privatization every month?
I know.
In my view.
What do you say to the naysayers? Because immediately we did the successful one of the Talanta. There were still voices there. Some vocal ones who were like skeptics.
Not just skeptics. There was also very factually inaccurate reporting. I will not name names.
No names.
But incredibly factually inaccurate reporting of what the Talanta ABS is about. However, and I do understand that securitization is actually a very complex financial transaction. Few people
may understand
it. So maybe there's work to do there to close the gap. But and in times when you don't have, when for example government does not have a ready access to quality, affordable capital or financing, it's structured solutions that come to the rescue.
Absolutely.
Okay. So I think you will continue to see more of these type of structured solutions coming to market to enable both public sector, i.e. government, and private sector to access capital.
You're right.
The naysayers, you see, I want to actually probably echo the president's remarks when he was here last time. He said, fine, you've had my plan.
Yes.
You've had my strategy.
Yes.
You think it's not right and you think it's not working.
Yes.
What's yours?
What's yours?
What's yours?
Bring yours.
Yeah, you can't tell me, stop implementing this or that doesn't work, but you don't offer a solution.
Yeah, we need solutions.
Because that's being a naysayer for the sake of being a naysayer. What we should do is bring critical arguments backed up by alternative solutions. Then we evaluate. If their solutions are better, we work together, of course. Which is how we all grow.
Absolutely.
So naysayers, we need naysayers because they keep everyone honest, but they should be well-meaning naysayers.
Yes, well-meaning ones.
Well-meaning, not disruptors and noisemakers. They say, there's a saying, I may not get the right words, but it says, many are those who criticize.
Yes.
The ones who are doing. But so criticizing is very cheap.
I think I know what quote you're bringing in. I think
it's the way it goes.
It's not the critic that counts, but the one in the mouth, right?
Yes. Fantastic.
I love that.
I love it because it brings a reality to the fore.
By Theodore. Yeah, you're right.
Yes. So privatizations, I think, are done right is the way to go.
Excellent.
Of course, we need to do it respecting all the rules, laws, and regulations of our country, and making sure that we're doing the right thing by the Kenyan people.
Excellent.
And I think we're on the right path.
The global positioning.
Global positioning, yes. Let me start by saying we are very lucky as an exchange to be based in Kenya. Because Kenya is actually a fairly well-known country.
Yes.
I don't know whether you've seen on social media, there's a trend where foreigners are wearing
the Kenyan, I don't know where mine is, but I should have it.
So maybe I'm wearing yours. But it tells you Kenya has a special place out there because there's visibility on the country. So I think with all humility, NSE benefits from that.
Absolutely.
That there is that visibility. Having said that, NSE is also one of the oldest exchanges in Africa. We celebrated our 70 years anniversary last year. So that means that there has been decades of positioning NSE out there from a visibility perspective.
Yeah.
But when a market is not doing well, the visibility can be
questioned and all that.
Lackluster, or you can cut the other way with criticism and all the other things. So we've been very deliberate on one. First, we start from home, which is engaging with our existing foreign investors. They are shareholders of NSE who are not Kenyan. So being able to engage with them through the AGMs, through the investor briefings, through roadshows. So we start from home. The second thing, and we do that in collaboration with other players in the capital markets. Fund managers, investment banks, brokers, capital markets authority, it is Ken Invest, all these entities that are facing out to the foreign investors. Number two, from a global position perspective, is the curated investment roadshows that we do. Last year, we targeted UK and US.
Europe,
yes, fantastic feedback there as well, including feedback on some of the things they would want to see. They want to see more products, more local investors, upgrade your infrastructure, all these things. So you can tell we take feedback on board.
And you're doing it, yes.
Yeah, so for viewers out there that have feedback for us, give us. We will consider it and we'll implement to the extent that it is value adding. This year, and next year, we want to target Middle East and Asia. Middle East, on Monday, next week, we are going to the UAE. We have an investor roadshow targeting the UAE investor community. We have confirmations from sovereign wealth funds, fund managers, investment banks, among others from that side. And these are guys who, if a Middle Eastern, for example, sovereign wealth fund, allocate, let's say the sovereign wealth fund allocates just 0.1%.
We'll be having discussions.
I'm telling you, it's going to be humble because they are people, they are people. But the point I'm making is that there is huge untapped capital in Middle East looking for opportunities here. So in Middle East, we are targeting next week. We are going to UAE. Again, to bring visibility to the NSE and showcase what we have. We are carrying a lot of listed companies with us, as well as other players in the capital markets industry, so that we have a joined up approach when we are talking to investor roadshows. The plan in Middle East is we will also target Qatar and Saudi, but that will be either later this year or early next year. And then next year we want to target Asia. And we are zeroing in for now, though the planning is still ongoing, on Hong Kong, Singapore, and potentially India. Among potentially others. Now, why? The reason is Middle East and Asia, those markets don't know our market very well. We know because we have the data and we can tell where this, who is who. So we know the foreign investors from those markets are not very much. I want to conclude by saying, two things. Last year, NSE was voted the best performing exchange in Africa. Which brought a lot of visibility to us. Number two, we had several other NSE companies that are listed on the NSE, included in global indices, the MSCI indices. Which means that foreign investors can actually now see us, and that has brought flow to our market. So we're not starting from zero. But when I say roadshows, note that I have not seen summit, I have not seen conference.
No conference, no summit.
I have not seen roundtable. I have not seen workshop. I have not seen what conclave. They call it conclaves. What I've said is an investor roadshow. So it's not a talking shop. It's a curated event focused on closing the gap between what investors know about NSE and the companies that are listed on the NSE and what the real status is. It's also doing one-on-one meetups
with the potential
investors. Okay, it's also taking specific feedback from these investors so that we can come and make whatever transformation we need to do. So I think the first time you interviewed me, I told you my professional life, I get tired of talk shows and things like that. Talking shops. Sorry, you're not talking shops. No, not this one. Talking shops.
Yes.
I prefer outcomes.
Yeah.
And so the intention is to absolutely bring that global positioning for a position NSE globally in a proper, well-curated process. Excellent. And of course, partners like you are very important in this journey by helping us bring that visibility and also bring investor education to the market.
Okay.
So we are grateful for that.
Wow. Frank, we can never stop. But for now, because I'll be meeting you again on the promises that you have, at least I'm happy we have achieved some milestones so far, so good.
Yeah.
But I have to ask you to end with a quick minute to an investor. There will always be critics in this country, and you have done fantastic work, strategy, everything else to an investor there, especially a retail investor.
Yeah.
Tell them why this is the right time. Speak to them now.
Okay.
Yes.
Look, for investors out there, whether you're a retail investor or an institutional investor, foreign or domestic for that matter, the timing can't be any better.
Yes.
When you even interviewed me when I first joined NSE last year, I told you, if you are not getting into equities now, you will be late. Now there's a saying again. The best time to plant a tree was
yesterday or what?
40 years ago.
40 years ago, okay.
The next best time? Now. Okay? So, any investor out there will not, in our market, this is the time. Now, you need, of course, to open an account. You don't win the lottery without buying the ticket.
Yes.
So, first thing, you need to open an account. That you can do through your broker. You then need to sit with your broker and if you don't have that information, get a better understanding of our market. You can also go through our website. There's a lot of information there. You can even reach out to our teams through social media handles, etc.
Absolutely.
Once you are in our market, come up with have a clear strategy on how you trade our market. Which shares, for example, are you buying to trade? Which ones are you buying to keep? Maybe because the dividend yield is okay. What are some of the other training and market data alerts you need to be able to monitor your portfolio and be able to add more value? And then lastly, be consistent. I usually tell retail investors, and you've said, I've just mentioned to you, even you can buy one share, and soon you'll be able to buy a fraction of it. But I said, don't leave it to chance. It's much easier to say, you know what, every month I will just invest 10,000 shillings. Okay, start from where you are. It could be 1,000. It depends on people's budgets. Consistency is actually what pays, because you will if you have to sit and decide, should I invest, should I not invest, or should I go out on Friday and enjoy myself, you might find that but the point is, this is the right time to go. We are reforming the market. Our strategy is working. We are seeing huge opportunities in the horizon.
Excellent.
This is the time to come to our market.
I love this. This is the time. Thank you so much, Frank, and I appreciate your time. And go bring the billions. Is it the trillions?
Trillions.
There you have it, right here on the Trading Bell. And we appreciate conversations with the head of the NSE, that is Frank Mwiti. And, I hope you took your nugget. If there's a time, it's now. When we started, as he said, this interview, he called on you to enter the markets. And look at it now. All the way, all indices up. So take advantage of the moment and the tide. Thank you so much for your time. I leave you now with the markets.